Okay, I think we're live. Welcome to the deeper synopsis of the 2022 budget. Um, Folks, please post your comments. I will kind of comment on each one or answer each one. It was one of the most boring budgets we've seen. Can you see me, Maddie? I don't know if you can. I suppose you can. Okay. I think maybe it's because we're trying to figure this stuff out in StreamYard. Um, so we have me and Anup here and Krishna in case you want to ask any questions, but I'll take you guys through the questions, through the thoughts. So this is more than what I did in the last. So this is much deeper. Okay. So please feel free to kind of add or ask me on anything of this sort. So let me quickly run you through the presentation. So the presentation itself, okay. I will, okay, here you go. Or maybe I can do this one. Oh, no, that's not the one. Sorry. I'm just going to, yeah, here you go. So we're going to go through the budget. The budget actually had, well, this is a large thing. So where are we getting the money from is on the left. Where the money is being spent is on the right. The one you're getting the money from is largely, as you can see, most of the revenue comes from tax. Some of it comes from non-tax revenue. 27.5 lakh crores comes from taxes. But some of it is shared with the state. So the net that comes to the central government is 19 lakh crores. There is also some non-tax revenue about 2.5 lakh crores. This was, I think this is budget revised estimates of last year. You got about income tax about 7 lakh crores. And I'll take you through all of this at a later point. But let's look at what happened in the budget, the most important things. Okay, we have questions, so I can also take part of it here. So one of the things that we should talk about is look at the budget highlights in terms of the overall money that's being spent. And two things I want to talk to you about is the Narega and farmer spends, which have actually gone down considerably compared to earlier. And also the roads, the spending on roads has just gone crazy. So this is very interesting because while we're looking at the overall numbers, they don't look so crazy. But the way these particular two spends are, that I think is a little bit on the extreme side. We're also looking at why bond yields rose today like crazy. We're looking at why the three main things here, which is bonus stripping, taxation on crypto, and we're looking at some sectors to benefit. And the difference between capex last year and capex this year is supposed to be 2 lakh crores. We are only going to react to the budget, like Srinivas said, because there's no point predicting. What could we have? I thought at least they'll increase some 80C limit or something like that. Nothing of the sort happened. She came to direct tax, taxed crypto and went off. Pretty much that's how it went. So here's the budget highlights. Okay, so if we go to the India budget, this is the big site. We can look at all the documents here, lots of interesting documents. But first, let's look at, well, the budget at a glance. The total revenue in the context of the government is, I mean, stuff that is oriented towards capital, which is recovery of loans, lending or borrowing, is called capital receipts. Expenditure, there's something called a capital account and the regular revenue account. And then the revenue account is just stuff that you spend on that doesn't result in any capital assets. Capital account is something that results in capital assets. So quick notes over here. We were previous year 2020-21 about 16 lakh crores in revenue receipts. This year we're 20% greater than 2021 actuals. So we were 20% higher. Okay, and 20% higher is also because of a lot of things. People are at home, a lot of incomes went up, YEVO and all that stuff. Tax rates also went up because you saw that 42% tax kind of come into the picture. Out of this, most of the increases happened in tax revenue to center, but also on non-tax revenue. So you can see from 2 lakh crores, we've gone up to 3 lakh. So more than 50% increase in non-tax revenue, which is typically sales of companies and all sorts of things around that, and IPOs and all of that stuff. So we've got there's silence. Arun is sorry, Arun, can you not hear me? But I think everybody else can. So maybe a slightly different concept over here. But okay, so what are we talking about for next year? Revenues go up roughly 10%, less than 10. In fact, if you look at the number we have on the revised estimate, 20 lakh 78,000 crores to 22 lakh crores. So roughly 1 lakh 20,000 crores. That means we'll increase revenues by 6%. This doesn't sound feasible at all. Remember, they have not reduced much taxes. They have not increased also too much, but there are some other elements of increase that have happened. But I don't think this entire thing warrants just a 6%. So I have a feeling they have reduced their taxation substantially in the I mean, reduce their estimates substantially. So we are going to get a lot lesser in terms of how much money the government thinks it's collecting and how much it will actually collect. Last year, also remember, they understated the amount massively. They made it only 17.8 lakh crores, but they actually collected 20.7 lakh crores. Having said that, their ability to generate the difference between that and expenditure is supposed to go up again. It was supposed to go to 35 lakh crores, it went to 37. So as much as they underestimated the income, this was about 3 lakh crore difference. This is about nearly 3 lakh crores of a difference. So they estimated about 35 lakh crores of spending. They have spent or will spend in the remaining 3 months. Most of the other expenditure will come, is about 37.7 lakh crores. So 2 lakh 70,000 crores or 2 lakh 80,000 crores more in expenditure. Interest payments are a little bit higher than expected. Everything else is the capital account is higher because the 6 lakh 2,000, this extra 50,000 crores was apparently Air India. So they had to account for, Tata would not buy Air India with all the junk problems it had in the past. So the government has to assume that 50,000 crores of a loss on its own. So it's effectively taken over those loans for itself. And that 50,000 crore is this extra capex. Now, how is that capex? Because by that capex, you got a capital asset, and then you sold that capital asset, so it's fine because still you got a capital receipt by actually in that case it would be non-tax revenue. I think, I'm not sure, but I think it's non-tax revenue. I'm not sure actually. These other receipts may contain it, but more importantly, what happens next year? Revenue goes up by 6%. Expenses also goes up only marginally. I mean, from 37.7 lakh crores to 39.4, so 1.5 lakh crores more, 1.7 lakh crores more, which is again 4 or 5% more only. So I'm like, yeah, are you underestimating what you're going to do? How can you spend only 5 or 6% more and earn revenue also only 5 or 6% more if the economy's nominal growth rate will be 12%? It doesn't make any sense. So I think they've underestimated both the numbers. So if we assume that the deficit is going to be what they expected, because both the numbers are underestimated similarly, capital expenditure, this is slightly different. So we look at the fiscal deficit, 15.9 lakh crores is now going to become 16.61 lakh crores. Now, I don't know, first of all, how do they get 15.9? Because they haven't spent most of the money. But if you go into some details, we'll kind of find this out. This is quite interesting because we'll go into the details and find out why this is such a big deal. 6.9% was the fiscal deficit for last year. It's going to be 6.4%. They're assuming that the GDP will grow to roughly 260 lakh crores. 260 lakh crores. Today's dollar rate is about nearly 3 point something trillion, 3.2 trillion or something like that. So very interesting. Where are we going now? So of course, this is all this is very boring. Everybody does this in some different ways every year, but forget this. But the numbers are interesting because the overall numbers say that the fiscal deficit is very high. As we might have noticed, we saw the 10-year bond yield hit 6.84 also. It's about 6.82 right now for the new and the 6.84 for the old. These two bonds are the benchmark right now. They're the highest traded, and this was the old one. This is the new one. This was issued in January, so it's relatively new. Trading was very heavy today, also because of two things. First of all, the borrowing seems to be very high. So if I look at bag2.pdf, this is the fiscal deficit of 16 lakh 60,000 crores. How are they going to bridge that 16 lakh? Because your fiscal deficit means you have to borrow to kind of this thing it. 16 lakh 60,000 crores means that your market borrowings are 11.6 lakh crores. This is huge, okay? Because so last year they said 9.67, they took only 8.75. Why did they do that? Because they got much more from the small savings. Small savings is your, post office savings and so on. There is okay, so now there is a bunch more. In fact, what has happened is I think they got a little more from I don't haven't seen the securities against small savings, the details, but I think they've got more across the board because interest rates everywhere else are down. It's only these interest rates that are higher. So they've managed to raise a lot more money with this. They're expecting that doesn't continue. They're expecting that it'll actually come down, which is why they have to borrow more. So roughly 1.5 lakh crores less will come from small savings. They've added the 1.5 lakh crores here and a little bit more. So 11.6 lakh crores is their estimated market borrowing for next year, including GSEC and T-bills. They're not planning to increase external debt a lot. So I don't know whether they're planning to issue rupee bonds in any meaningful way, or dollar bonds in any meaningful way. But I don't think that's in the plan right now until all the other things iron out. What they did not do this time was, the ask by industry was that the foreign institutions should not get taxed on capital gains that are in India. They get taxed on coupon. Every country taxes a foreign investor on coupon payments, but not on capital gains, except for India. India charges both on coupon and capital gains. They said remove the capital gains, will be equal to all other countries, and therefore we should be able to go and kind of build more with respect to so what was I saying? Yeah. So the problem uh, with much of the market borrowings for the government is that they can only predict what they know right now. So I don't think, for instance, they've estimated a large enough recovery from either disinvestment or BPCL sales or anything else that's coming along. So this number, I don't know if it'll come down, because remember, even right now, they borrowed less from the market than they thought they would. Yet bond yields have gone up only in the last few months. So it seems abnormal that bond yield should go up even before today, when the borrowing is nearly 1 lakh crore less than expected. Yet we are seeing such a heavy damage, and next year's numbers may also be similarly wonky, in the sense they might actually borrow a lot less. We don't know about this right now. So let's leave it at that. Let's I'll go through this a little more and try and see if I can get some more color. More interestingly, if you look at the breakdown of the revenue, they're expecting a fairly big bump. You can see here corporation tax, which is paid by companies, from 4,57,000 crores. It was supposed to go to 5,47,000. It's actually gone to 6,35,000. This is planned to be further increased another 10% to 7,20,000 crores. Income taxes, that is individuals like you and I are going to pay taxes. This was supposed to go up from 4,87,000 to 5,61,000. Again, this is like a 20% increase. This is also like a 20% increase. But this actually increased nearly 35-40%. So you got 1 lakh crore more from each of these heads, right? So you got about 7 lakh crores here. Customs was again a massive increase. 1,30,000 became 1,89,000. Again, this is because our import duties were quite high last year, and we'll come to this at a later point. They're trying to rationalize that as well. Excise duties are high enough because I think you've got the petrol and fuel. That's all that's left in excise. So that's the one that's driving you. Think about it. It's 4 lakh crores. that we are paying. That's about 30 odd thousand crores per month that goes to the central government in excise duties. Probably a similar amount goes to state governments as well. So it's that much that we're talking about. GST has increased reasonably. I think they plan to increase it even more going forward. RBI could be out with Operation Twist. Okay, this is, I'll come back to this. We'll talk about bonds in a bit. So I think the other one on the bond, this thing is also there. Yes. So we've got center's net tax revenue. Okay, let's go to state share. They're actually planning to give a reasonable percentage of that. I think the percentage should be roughly the same. They're looking at some profits of about 1,13,000 crores on dividends and other things, and then non-tax revenue from other places as 1,34,000 crores. This is roughly equal to what we have today, so it's not a big deal. But about disinvestment receipts, now they planned for 1,75,000. They're actually going to make only 78. Next year's plan only is 65. So it's not, they don't have much of a plan. I think just BPCL alone should give them more, but let's see, because I don't know if there's something else brewing there. So that's quite interesting overall. Okay, so leave the rest of it. That's not a big deal. So let me just go to one more point. This is where it's quite interesting. Okay, so if you look at these numbers, this is the budget, this is the revised, this is the budget for next year, this is the previous year. So roughly pensions are spending the same amount, defense we're spending roughly a little bit more maybe. Fertilizer subsidy, again, not much. Food subsidy was massive because of that one-time payment that had to be made 2 years ago to FCI. This time it's about 2,86,000 crores. It's a lot, but it's not as huge as I thought it would be. And 2,42,000 has become 2,86,000, or about 40,000 crores more. Part of it was that farmer agitation also, so they kind of bumped up the cost. Next year, they're actually planning to spend a lot lesser. I'm talking 206,000 crores. That is like 40% less. Nobody's talking about this. I don't want to talk about it because I don't know, the whole world will erupt more agitations, but 40% less or 30% less at least of food subsidy next year. Okay, mark this carefully because it's interesting. I mean, you're spending less, a lot less, 86,000 crores less or 80,000 crores less on food subsidy. So where's the expenditure going up? They're actually spending more on education, which I thank goodness, because you need to spend on education now. So there is that bunch of things that they mentioned. So including e-learning and setting up of rural infrastructure for education. This is actually a good thing longer term. Can't make any benefit out of this, even if Baiju's lists don't buy it, because I mean, that's just a, but that is not the reason why I'm thinking of highlighting this. I think this is good for us 5, 10, 15, 20 years down the line. We're not spending much more on energy. Despite what people they talked about Atmanirbhar, energy, this, that. There is not so much being spent more on energy from a government perspective per se. This may be coming into other areas though, but overall energy is not substantially higher. Then FinMin is getting nothing almost. So they're almost like, yeah, boss, finance minister ko to nahi milega. So I don't know what the deal is. There is a bump in interest payments because you're borrowing more. So every year it goes up. Remember, 9,40,000 crores out of a 39 lakh crore budget, 1/4 of your money, your taxes and everything that you're doing is going to just make interest payments. So it makes sense for the government to try and reduce that bond yield a little bit. But I don't think there is enough economic thinking over there to try and actually make it such that this interest rate can be reduced in a meaningful way. But unfortunately, or fortunately, we are actually paying those crazy numbers on interest rates going forward. Also, what has happened, and let me talk to you about where the money is. Where is the where's the road budget? I can't see it here. It's in another place maybe. Okay, so yeah, health, home affairs. There's nothing major different in most of these places, except the transport. Yeah. So transport, which was 2,16,000, has actually reached 3,51,000. This is a fairly large jump. And we'll see this in a few minutes about why that jump is so spectacular. So if you look at the core schemes that we're talking about, the Manrega, which was 1,11,000 crores in 2021, is only 98,000 crores. It's come down. And the next year's budget is 73,000. So it's actually substantially lower. This time they bumped it up because of some of the corona issues. But they actually have only 73,000 crores planned budget. So Manrega budget is actually a little bit less. This is a very massive. Was there a big jump in telecom? I'm sorry, I'm just taking a look. Telecom, IT and telecom. Oh, yeah. I mean, this time they spent a lot less, but next year, I think they do expect to spend a lot more. They have talked about some things in the budget about setting up some new areas and all that stuff. So maybe that's what it is, 70,000 crores. Now there is a bunch here with respect to the core schemes. We've got okay. So there's nothing much here to see except for the fact that the Jal Jeevan, which is the tap water wala mission, we spent a little bit less than we budgeted last year, but apparently it's helped about 5 crore houses get water. They want to make it another 3.5 crores. There's also one more area which I think you should look at. So these are a different set of programs. Okay. So most of them are roughly the same. We're still paying a lot for the some of the central the Kisan schemes. Also for crop insurance, there's an interest subvention scheme where this time they budgeted 19,500 crores, which is a lot. I mean, considering it was zero last 3 years. Also, there is urea and nutrient-based subsidies. This is good for fertilizer companies. It has actually gone up quite a bit. So it was 20,000 crores budgeted, 64,000 crores actual, and 42,000 crores budgeted for next year. 58 was 675. This is slightly lesser than this, but the spend has been huge. Okay, so it's not small at all. This seems like urea and nutrient-based subsidies. So for some of the fertilizer companies, this may actually be a big deal. And most of this spend will happen in the next 2 months. So I have a feeling the cash transfer of the fertilizer subsidy will happen this quarter, in the next 2 months. It always happens in the last quarter, but the numbers are staggering, pretty big compared to that. You can see here the food subsidy to FCI, which was supposed to be 2,02,000, was 2,10,000, but next year's budget is only 1,45,000. So are they planning to procure less, or are they reducing the prices? I don't know, but I have a feeling there's something on over here. Maybe it is interesting because nobody's noticed it yet. It's about 20% lower. Now, this is actually 30% lower. Yeah, 30% lower. Where the expenditure has increased quite substantially is in, let me go down to the roads. Yeah, here you go. This is the one. You see NHAI go up from 46,000 to 65 this year. Next year it will be 1,34,000. So it's double of this year, roughly. A little bit more than double of this year. Which is a fairly large jump. So I have a feeling the road companies' infrastructure there might actually increase. There's some cement thing that will also happen. And depending on what they want to do, there's a bunch of things they want to do inside of, in rural to connect, but also within cities, they want to put elevated roadways and all that. There is a bunch of other things, including, okay, there's nothing much. I mean, there's some schools. This is one of the things she mentioned on the budget, which was the model residential schools. They've put a lot of money for space technology. I like this. I don't know what they'll do with it, but pretty interesting concepts. They're going to do a lot of work on road repairs, but this is roughly the same. This was a plan 3 years ago. So they had to upgrade a bunch of roads. There is, a continued, so the direct benefit transfer for LPG continues at 4,000 crore budget. Last year, although there was a 12,000 crore budget, only 3,400 crore got spent. I don't know why. Okay, I think Srinivas is right that this is about employment generation for the states of UP and Bihar. Of course, I think they need it because there's so many unemployed people over there. It just so in the south where I am right now, I don't think unemployment is that scary a phenomenon as it is in UP and Bihar, because there just is not. Oh, space technology is 5G. Okay, so I did not know that. It's possible. I hope you're joking, but it but it's interesting. No, but coming to jobs, yeah, I think they do need a lot more in terms of job capabilities. They've also created a slightly higher budget for MSME borrowers. Now this 1,50,000 crores is a guarantee, so it may be like the first 10% that is guaranteed. That means you take a loan for 1 crore, 10 lakhs is guaranteed by the government. So the collateral that you need to give is only for 90 lakhs and so on. So that may be it may actually result in larger credit to smaller subscribers, but depends on the scheme. There are multiple schemes here, so I don't know which one this is specifically targeting. And of course, you have Khelo India, and Khelo India is getting 900 crores. I don't know where this goes because I don't think India is kiloing anywhere that is using this 974 crore. Well, I'm joking. Obviously, there has to be something that happens over there for it, and good that they are actually doing something for sports. Let's see what happens going forward. MP Lads gets a big upgrade, about 4,000 crores now instead of 2,600. That's a 50% increase. So I think that's also in the scheme of this thing. For insurance companies, yeah, there's a surety bond that can. So if you do a government contract, you have to give a bank guarantee. So instead of the government paying you first, you have to pay them, and effectively saying that, listen, if I screw up and you have to fine me, you have a bank guarantee against that contract. So these bank guarantees are notoriously difficult because once you start doing 4 or 5 contracts, even after the contract is over, no, the government doesn't free the guarantee. So what happens is they retain the guarantee and they'll take you to court. They'll put you to, because they don't want to pay you fully and say this thing, because tomorrow some CAG will come. They'll say, no, we objected. Then we went to court, went to arbitration. Arbitrator said no. Then we went to Supreme Court. Supreme Court said, dude, what's wrong with you guys? Then only I gave back the guarantee. So everybody tries to do this drama. So they don't release the bank guarantee. So now one bank guarantee is stuck. He can't obtain another bank guarantee to the next project. This is a pain, right? So what happens now is they don't necessarily release the bank guarantee. They make a payment of about 75% if the arbitrator has won. Arbitration is won. So first level of argument is arbitration. Once the arbitration is won, they release 75% of the payment. This then they are allowed to go and get another bank guarantee. But banks generally don't lend because the balance sheets are so stressed. So what happens is now you can go to an insurance company and get a surety saying, listen, I have this money and I won the arbitration. So can you insure and give me a surety against the next for the next contract? And that insurance surety may come at a cost. They may have the ability to post some cash against it and so on. Okay, so let me quickly answer. I think otherwise we'll get too many questions. I'll quickly go in sequence. Okay. What caused the bond yields to spike? I think mainly because of the increased borrowing, also because the government didn't introduce anything with respect to giving that capital gains free, but mostly I think was the fact that the borrowing size is so much more. Lots of mention on clean and green. They said it, but I don't think there's much because Tata Motors went down. I don't know. Maybe that's the green part of auto, right? So they talked about it, but nothing really happened there in terms of. I haven't seen any major project that's increased it. Maybe I can take a look, but nothing here points out to a major increase in something for green. With the bond yields actually crossed a 6.8% high. This is very lousy, but I feel this is a trend now. Okay, it probably goes to 7.5 in the medium term, and in the short term, in the next 4 to 5 months, because nothing is happening that will bring the bond yields back up unless RBI gets in and says, listen, I think we need to curtail the long-term bond yields. There is no reason why long-term bond yields will come down. Nobody wants to buy it, in the sense there's a lot of supply. not enough. Always demand is manufactured. That means banks are told to buy. Banks are the biggest players. You don't allow foreign investors to buy because also sort of a drama. So, or you do allow them, they don't really want to buy it. This all of this together means today the best way to get a 5-year fixed deposit effectively is to buy a government 5-year bond, which is now beyond 6%. No large scale public or private sector bank is giving you large scale. I'm talking about someone you can trust unequally. 5-year deposits at more than 6.1%. 10 years is 6.8, 6.9%, which is, I think, the upper end of pretty much all of the banking curve. So you've reached a point where it is actually makes sense. And I would encourage you, if you have long term FD level needs, which means taxable income kind of needs, so that's probably a better way to kind of do things. Here's where okay, we have a bunch of things. Deepak, how do you expect the USD INR to pan out post budget? I think the INR should get a little bit weaker beyond 75, largely because the RBI is probably going to let it if the FIs continue to sell. I don't know what they did today, but if there's more selling, I think there will be not much pressure from the RBI to buy. To sell, to kind of control the outflow. They've done it so far, but I think that's pretty much where it ends. I think there's a bit of weakness coming in front of us, very small, but I don't think it'll cross 76. They let it play between 74 and 76 for the next 3-4 months until the Fed actually increase rates, at which time we'll see the impact of it. Have the bond yields gone up because of government bonds coming up for redemption? No, the government bonds coming up for redemption are not that many. So if you can see, I can show you here how to see the government's current outstanding. So you go, not to public debt, but let's say we go to data releases. And in data releases, if you see the list of government India securities outstanding. So this is roughly, this is what is outstanding in the next financial year. These are the bonds, right? So, 60, 80, 120, roughly, maybe 250, 300,000 crores, a little bit less than 300, I think. I could actually copy this into Excel, but you can't see my Excel because I haven't shared the window. But let me do it anyway, and quickly tell you what the number actually adds up to. It adds up to about 300,000 crores. This is 300,000 crores that comes for maturity in the next financial year. So if they're borrowing 11 lakh crores, that means they're actually probably going to have to borrow, I think they'll borrow 7 odd lakh crores or 8 lakh crores, with 3 lakh crores coming in as, because what you saw over here in the bag too is the gross borrowing figure. This is the total borrowing, because some part of it is the return of money as well, right? So I think, I'm not sure though about this, because we might see this in the receipt budget bag 7. I can show you where to look at that from. So, the budget is actually yeah. So do we have details? Do they have details? Interest receipts and capital receipts. Recovery of loans, non-debt receipts. Okay. Debt receipts 1 lakh. They haven't given details. Or haven't they given? No, they haven't told us about the details of the borrowings with respect to this. Let me just see if there's anything that we can get. Okay, so we could actually, there's more in here, which is the key features of the budget. Here's where you get a lot of, the overall gyan about. This is roughly what she said in the budget, which talks about all the things they've talked about. Okay, I can't. 1 second, sorry. Yeah, but before I go here, I haven't seen something around how much is coming for redemption, but I think it's 3 lakh crores. I think 8 lakh crores is the overall gross borrowing, but I could be wrong here. Um, Also, okay, there is should do you think RBI will come out with an operation twist? The answer for that is, uh, I think they will in general, unless there is a lot. If you look at the numbers right now, it doesn't sort of seem like you need an operation twist in the near term. There's only about this much, which is April and May and June. Well, June there may be some June, and then August you have a little bit of August and September, but it seems to be well spread out. So I don't think I see this as a problem. And there's nothing maturing in Jan, Feb, March. So I think at best they might do something in the later part of the year, because you're seeing a lot of maturities happen in the early part of next year in 2023, April, May. You're seeing over 150,000 crores. So you might see Operation Twist happen again later in Jan next year. That's typically when it happens. Um, so Okay, we've got questions. Bond inclusion, raise money from outside. Okay, are the capex numbers adjusted for inflation? Yeah, I think so. I think they've estimated what inflation should be, and that's how the budget numbers come. I would like to know about the market borrowing program. That's a good question. I don't know how much is currently being borrowed from the market, how much is currently being borrowed from T-bills, and all that. But they're obviously borrowing less from post office schemes, which means your interest rate on post office scheme may actually be coming down. So that's something that it's interesting, because why would you reduce the amount you make from borrowing schemes like those? Does the payment of interest? Yes, the payment of interest of NHI bonds also comes from that whole NHI thing, because the NHI, so the way NHI works is NHI is a company, but it does not have share capital. Every year, the money that the central government gives. We go back there. Yeah. Go through that. Oh yeah, we have to go. We have a bunch more. So quickly coming back to this, the NHI interest costs are actually part of what happens. NHI gets more money, it gets it as capital, like almost like share capital, and then uses that money to pay out everything. So it's always going to be like a mega loss making entity, but by design more than anything else. Okay, so let me go to the next part in here. Guilt is anyway. Oh, okay. Gilts, if the bond yields go up, no, you lose money. So to give you an example, if the bond yield went up from you see over here, this 97.94 would have been 98.5 or 98.6 yesterday. That means the bonds lost 60 paisa today, which means they lost 0.6%, 0.7%. Losing 0.7% in one day is quite a bit, right? So if you end up losing money, then your bond fund values will also come down. So that is one of the reasons why we had gotten out, saying this does not look good. And going by this budget, I wouldn't get in just yet. I'll just wait a little bit longer before we kind of see some stability. Sorry, gross borrowing is 14.5. So it's that means I got it wrong. 11.5 is the net borrowing plus 3 lakh of. So they're borrowing a truckload of money in the next year. Okay, so okay, let's go to this point. Where are we on the budget? So we know that Air India has been sold. We know that there's a public issue of LIC, hopefully in this financial year, but we don't know. There are other divestments. They have not said much. There's a 200,000 crore credit guarantee scheme for the MSME sector. Like I mentioned, that's for MSMEs to. It's not, the whole thing is not by the government, but the possible credit guarantee can give the MSMEs credit up to 200,000 crores. We'll get some more for tap water. And there are some 5G spectrum auctions next year. There's no changes in direct tax. There's some I'll talk about. Okay, first game changer is one second. Okay, sorry. Okay, I thought it was Niyat calling. There is no bonus stripping allowed anymore. So what happens with bonus stripping? We know that if you buy a share pre-bonus, and then there's a post-bonus adjustment. So what happens is you but we bought SRF for 10,000. And then we got 5 shares for 2,000 rupees each, 4 shares extra, 4 shares were free. We sold the 1 share at 2,000. According to income tax department, it was 10,000 bought, 2,000 sold, so therefore 8,000 of loss booked. The other shares were supposed to be bought at zero, and they have a value of 8,000 today, but I'm not selling them, so I'm not realizing any loss or gain. So today, this year, I get to enjoy the loss. Next year, I wait for a year and I sell that 8,000 rupees wala 4 shares, and I get a gain of 8,000 rupees, but on that I pay only 10% tax. So it's 800 rupees tax. And I've got an 8,000 rupee loss. I can use that to offset any other gains that I've had in the year. I can defer these taxes by doing another bonus next year and so on. This was not allowed in mutual fund units. Now the law has said um, you cannot do this for shares. You cannot do this for InvITs, REITs, AIF units, everything. So here's what happened to SRF. We have it in the portfolio, right? So we bought it on one day and we got bonus shares on some day. We sold 1/5 on the day after that. We are holding the remaining for a year. Now the new rule is that if you sell your pre-bonus units, that means you bought a share and within 3 months it gave a bonus, and then you sold the pre-bonus shares. That pre-bonus shares, you cannot take that loss at all. This starts from April 2020. So the SRF trade is fine because it's in a year when this law does not apply. If you did this anytime after April 1st, when the record date of a bonus is after April 1st, you can no longer do it. So essentially, any bonus that has to happen this year. Next year onwards, there's no tax efficiency in the bonus. Okay, so we've got a lot of people looking at the rules of bonus stripping and saying, Deepak, look at this. Yeah, this amendment will take place from 1st April 2023, not 2022. So why are you worried about it? The answer for this is in a special thing. What does it mean when they say April 1, 2023? That means you file returns for certain year, 1 year after that year is over, as in the subsequent year of that, in the sense, so you for FY 21-22, which is where we are right now, you will file only in July 2022. So in July 2023, you will file for FY 22-23, which means you will file for April 22 to March 23. You will file this on the year starting on April 1st, 2023. After that is when you can file your returns. Because of that, anything that applies after April 1, 2023, then it actually affects FY 22-23, which starts in April 1, 2022 onwards. That's how tax documents are written. It's just a way that they're written. So that means that even if this bonus stripping law says it's applicable from that, it means April 1, 2022 onwards. That means in 2 more months, that law is no longer applicable. This is a big thing, and I mean, please feel free to ask questions here. I don't know the answers, but here's what they've said. Crypto, which is called a virtual digital assets, which they've defined as something that has some crypto element in it. So we've got sales and transfers taxed at 30% of profit. All sales, all transfers, which this essentially means that anything that leaves your wallet effectively and goes to another wallet will be taxed. That's how I think the tax people will interpret it. Anything is a transfer is a transfer. Now, when is something not a transfer? If I lend people money, it's typically not a transfer. But when you lend the money, you either have an agreement to lend in the first place, and you don't get anything in return for it other than maybe a paper that says I have lent you money. In most crypto lending or crypto staking, you lend one security, you get another security back, you get another token back. You get to keep that token for yourself. You can even sell that token. So effectively, whatever token you got for staking or for lending, you can take that token and sell it. And now you no longer own the rights to get back that other token which you have lent in the first place, because you've given away your staking or lending token. Because of that, they will look at this and say, boss, you're not actually lending, you're converting one security into another, and then you're converting it back. It's like a repurchase, repo what we call repo is just a purchase and a repurchase. That means I sell you, I buy it back from you. When you're doing a sale, that sale concept itself is 30% taxed. At the point of sale, 30% tax on the profits you made. So if you bought Bitcoin at $10, you sold it at $30,000 on that 29,000, blah, 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 you have to pay 30% tax. Then when you buy it back, you'll buy it back at 30,000, that's fine. Now your cost price is 30. If it goes to 16, you again stake it, you'll again sell. It be called, it's deemed to have been sold again. And this can happen any n number of times. You can keep doing this between multiple these things. So you'll pay 30% of this is all okay, because in the end you can lose in one, win in one, and so on. But the thing that they're talking about now is anyone who's involved in a crypto transaction, the seller needs to deposit a TDS, or the buyer, I think, or the exchange, or whoever, somebody has to facilitate this, has to deposit 1% of that transaction value in rupees before every trade. So if you transfer, say, a Bitcoin to USDT, you will value Bitcoin in rupees. You will value USDT in obviously rupees. The same rupees is what you're transferred at. And 1% of that amount, the overall amount, not the profit, just the 1% of the overall amount. So for a $30,000 transaction, $300 has to be given to the government. Exchanges will be forced to do this. They will have to take KYC of Indian people, and they will be asked to do it. Otherwise, there will be issues, because they will be then deemed illegal. And if you deal with them, it will be called bad and all that. Now, your question to me, maybe, Deepak, how will they know? Of course, they'll know. I mean, if you're doing stuff inside an exchange, they just have to ask the exchange. And if the exchange wants to be compliant, they will have to reveal their data. And you're always hanging on the specter of tomorrow. If they find, if they're able to twist the exchange will kneel and kind of do it. But what if you do it from a wallet to a wallet? The answer is most of these things happen on chain. So all they have to do is find your wallet once. If they find it once, every single transaction that emanated out of it will then be considered a sale transaction, unless you can prove that the receiving entity, so you transferred from one of your wallets to another of your wallets, then you have to prove that the other wallet is also yours. So I don't know, they might just say, do you have the private key for this? Show me. Then what happens? I mean, crypto will be taxed essentially. But another thing that happens is no set off is allowed. So that means you can't take a losses on crypto and offset them against your capital gains. No carry forward of losses, which means you can't take losses this year and say I'll offset against profits next year. So anything that goes is gone. Since there's a 1% TDS also, okay, there's also no expenditure allowed. So if you did something for mining Bitcoin and spent a lot of money, and then went and sold that Bitcoin and got rupees, you can't say I spent so much on the mining and therefore I can't be taxed. Technically, your cost is zero because you mined it. It is just an acquisition cost that is allowed to be zero. I don't think any other cost will be allowed, including mining of a computer and so on. Remember though that I think between crypto assets, we will not see any taxation increases, in the sense that taxation, we will not have any problem with taxation offset. So you can lose money in one crypto and gain money in another crypto, and you can offset the two. So I know this gives you guys thoughts, but you can do that, I think. Okay, any questions on crypto? We can otherwise move on to the next part.
One question from
Oh. Okay. ऊपर है क्या? Okay. हाँ. If we trade a BTC ETH pair, both parties, if you buy from a person who's also Indian, both parties will be subject to 1% TDS. It's a pain. क्या करोगे? I don't know the answer to these questions yet, in the sense I don't think I have pakka answers, but it will be it's loose enough to be interpreted liberally by the tax department officials. So how the government plans to enforce it on the exchanges, I don't know. We'll see it later. Okay, latest disinvestment targets. I think the disinvestment target is much lower than expected. So we don't, 60,000 crores. I don't think that's a big deal at all. So let's see what happens, but I don't think this is going to change our thing. Lastly, this is a new this is a new rule. Okay, if you gave equity to a private company, you are supposed to prove your so you give money for instance, if you invested in Capitalmind, I am required to take, instead of when you give me money as equity shares, I'm required to take your source of funds. That means either your income tax return saying you had your money, or your savings history or something like that I should take to say that this is legitimate money. But you could have loaned me money. I could have taken a loan from you, and that was not required for me to figure out what your source of funds were. Other, if you are not a regulated entity. Um, Now, if you loan as an unregulated entity, even a company lending to another company, if it's unregulated, the source of funds needs to be highlighted. And if it's a source of funds is borrowing, then that subsequent borrowing has to be highlighted, and so on. That idea is to give IT returns or other borrowing details and so on of even people who lend to private companies. So that's a new rule that's come now. One small change for bankrupt companies are typically ऐसा होता है कि you have a say a 1,000 crore loan on which accrued interest is something like 400 crores. That whole 1,400 crores is taken and converted to equity. So you get equity. So what they do is they say, okay, I have paid 400 crores now in interest. So please give me tax credit. My interest cost is 400 crores. Income tax department earlier was like, where you didn't pay anybody any money, you just gave them shares, and you say it's worth 1,400. How do I know? So then there were some court rulings against them. So they have now made it a law that says if you're bankrupt and you try to convert some loan which has an interest component, that interest component also, if you want to convert it to equity, that interest is not actually paid, so you can't get an offset for it in your book of accounts or saving for your taxes. In terms of companies account, when they reveal it to the exchange, they will show it, but they still cannot offset it for taxes. So the tax law based accounting is different from the mercantile accounting or the gap accounting or the Ind AS accounting, the way we have it in general. There is a flat 15% surcharge on LTCG. On listed equity shares, it's only 15%. That means if you sell a listed equity share, it doesn't matter even you sell it for 500 crores. The total LTCG is 10%, on which there's a surcharge of 15%. That means 11.5% max. Any other LTCG, private companies, gold, real estate, any other capital asset, you'll pay 37%, up to 37%. So if your income goes to 5 crores plus, and you sold, let's say, a house for a 1 crore profit, 20% is taxed. So 20 lakhs plus, since your total income is above 5 crores, you have a 37% surcharge. It becomes 28% effective tax with all the cesses. Now, the whole capital gains concept has now been set up to a surcharge of only 15%, which means 20% with 15% becomes 23% tax plus some cess. So it will become close to 24%, but it's a lot better than 28. Uh, I don't know how much, but I'm just saying that, that's the max that you'll pay, even if you make very, very large amounts. So good for private companies and so on. Now, this is where I think, it's quite interesting. Okay. So massive import duty cuts of the kind that you can't even imagine. Okay. We've classified a lot more in terms of, okay, forget this, but look at this. So this is some increase. So the umbrellas they have talked about, okay, increase from 10 to 20. These are mentioned in the budget. I don't know why. Imitation jewelry was mentioned in the budget. But even small things, loudspeakers have gone up in tax. Smart meters, which they had reduced a couple of times earlier, had gone up to 25%. PCB solar and solar cells, because they want to manufacture more in India, they've increased the tax to 25%, which means local manufacturers of solar cells will benefit. There used to be one Moser Bear, but I think there's some Adani company, I'm not sure, which is manufacturing this, including with solar modules, where you have a 40%. It's doubled there. Now, everywhere else, taxes have come down, import duty has come down. There's a very few items that it's gone up. Almost everything else, the taxes come down. So you've got things like, even grapes, dates, pistachios, because I think all that Afghan disaster we've had lousy rates, and people in Delhi decide this, and Delhi is big on dry fruit, so rates have come down. Import duty rates have come down. 30% has come down to 20, 10, things like that. But also for wheat and maize, we brought down import duty rates. So I don't know why this is. This may be because they're thinking inflation will increase. Remember, this does not wait for April 1st. All these indirect tax changes happen immediately. That means right now onwards, wheat import duties have been cut, grain import duties have been cut, millet import duties have been cut. Um, Add this to the lower farmer payout in terms of the farm subsidy. There is something interesting happening over there. I don't know what it is, but basically they are reducing the amount of money that's going down there. Maybe good thing, maybe bad thing. I don't know what it is, but I'm just saying. Maize is, this is for animal feed. Oh, okay, interesting. No, but interestingly, a lot of this is could be used for multiple purposes. And you can see the numbers. I mean, you look at this. I mean, for everything, including cat food, is actually seeing lower import duties. You're also seeing it of a lot of core metals and stuff like that. So from gypsum to I don't know who imports Portland cement paint to import, but okay, let's assume you can, but it's now free. This is the gray thing, not the white wala. And then you got a lot of the ores. Uranium, in fact, has gone to free. Zinc, copper. There's a lot more lower taxes on some of these elements. They're not, and of petroleum products also. So apart from coal, you got coke, oil, aviation fuel. One part is free, but this is not the general thing. This is naphtha is also reduced by half. Petrol is reduced by from 10% to 2.5%. ATF is also reduced by half, and LPG is also reduced. So maybe here is where a BPCL may not benefit as much in comparison with what one might have thought. But I don't know how much petrol we do import a lot of this stuff. It's not like we don't, but the import duties have come down off these items as well. So that's quite interesting. Now it comes the interesting part. A lot of the chemicals, so it depends on where you are in the chemical cycle, but a lot of chemicals have been, we have seen reduced on import duty. There are some hydrocarbons. There is styrene, which is, for instance, styrene is the monomer on which polystyrene or thermocol is based, and then a bunch of others. So this is probably negative a little for Reliance, which is one of the largest makers of styrene in India, the monomer at least, but also a bunch of others, even PVC and PTA. PTA is a bunch of chemical companies in India. They call them, they all commodity chemicals. They call them specialty, but they're not actually specialty. These are all companies where you're going to see higher competition because rates have come down quite dramatically. Caprolactam, which is GSFC's product, that has also come down so you can import it now from outside. So depending on where you are in the chemical cycle, you might actually see either a big benefit or if you're a user of these products, you will see a big benefit. If you're a producer of these products, you will obviously see a hit because interest duty is down by half in most of these cases, even in fertilizers. So you can, there's a bunch over here. What we might have seen as a very positive budget might actually not be great for some of the sectors that we're looking at. Okay, especially well, where are we? Yeah, there's this thing just keeps going on. It's literally everything, including cotton textiles. Can you believe? Parachute fabrics, nylon, and literally cotton, even yarn. This is a yarn, man-made fiber yarn has come down from 20% to 10%. There's also cotton yarn somewhere down below. The problem is it's finding this stuff is a little painful, but you can see here all these items I'm showing you right now. The duty has come down 25% or down to 20%. And whether it is carpets, leather, everything that was raised in the last 2 or 3 years has actually been brought down or is being brought down. Um, so competition from abroad for a lot of this, including textiles, chemicals, petroleum products, is going to go up only, including things like shirts, uh, and stuff like that. Yeah, yarn was due to, I guess, yeah, there was a high input cost. Anything on import of used plastic bottles? I don't know, Gaurav. I think we'll have to go through this specific kind of used plastic bottle. Maybe may or may not be taxed. But you can see this is like crazy, man. It keeps going on, pages and pages and pages of this stuff. And then that was just the textile part, and then there's literally half of the things that you can imagine will be here, and half of the things you can't imagine also will be here. Like, I do think, yes, it may be. It's two aspects to this. Okay, first, it does impact inflation, because if you have high duties, then the local domestic manufacturers can charge more. But also because you have a problem when you're trying to negotiate trade agreements with some other country. If you're having very high input rates, they're going to be looking at you and say, "Yeah, what? Why should I give you any bhav in the first place?" WTO में complaint करेंगे ना. We'll be like, "Oh, you can send us your stuff for free, but when I send you my stuff, you tax me with import duties. That's not correct." So what America and Europe do is, when they want to put tariffs, no, they'll say your quality is bad. They will say ban your product from India for, say, 2 years. That way, they produce this, they call non-tariff barriers. India, on the other hand, had an across-the-board tariff barrier. Across-the-board tariff barriers are not allowed in WTO, and if they complain, something negative comes out, it becomes a big problem. So this is like one way they can say, okay, we'll slowly. She did mention this. She's going to slowly transition it down, which means the next 2 or 3 years we might see these duties come even further down, especially when it comes to things that were highly taxed. um okay, so that was that. And yeah, so okay, I won't go more into detail here, but let me go boom boom boom. Okay, so we have had fuels and aviation. So in general, the what are the areas that I think this think in general the budget is not going to change much. I don't think there's a massive increase, but I think the hidden things are the government spending less on food procurement, more, a little bit more on fertilizers, coupled with the fact that fertilizer import duties have come down, so we may be able to get stuff from abroad. We will spend a lot more on roads. So I think we should focus, this next year may be interesting to focus on infrastructure and finance. So because some of this infrastructure will need corporate finance as well, and so corporate financing banks may actually see some benefit. And also the overall structure around infrastructure, where you have project financing companies, manufacturers, people who do trains, people who do roads, people who do transmission of energy, because they had some specific projects around transmission, especially when it comes to digital part. So we have Power India. That's a interesting stock. So it went up today as well. I don't know why it's going up, but it's going up. But it this thing, yeah. So we do need to lower barriers, yes, because overall, we do have a bunch of things. So let me now make this a little bit easier for us to talk. And if you guys have any questions, can quickly take them. Took it look longer, but I took questions through, so I think I've answered most of the questions so far. um, Maddie says, well, they import cellulose acetate based filters, so that's 50% of the cost of the cigarette. Oh my god. Okay, that is a lot. But my sincere advice be to not smoke at all. But if you want to buy ITC, that's a good input. I think a lot of things that will happen going forward is largely based around I mean, the budget surprises over, right? There's no surprise. There is nothing in the budget that comes in and says, you know Deepak, what just stands out to you? I don't think there's anything that stands out in any meaningful way. They're spending 5% more. They're earning 5% more. They're spending more on roads but less on agri and farmer stuff. I think that's a good idea, but still, they're spending more on education. Very good for longer term. Um, where does India benefit or move? So I don't think there's a big impact on the equity markets. My overall funda is that it's over. And unless I have not seen enough because I haven't gone through all of the documents, added up numbers compared to last time and all that. But I think on the face of it, this is like okay. I mean, there's nothing big in here. GST will change on its own. Um, does the portfolios change? I think from a long term multi cap portfolio, we will have we've been waiting for the budget to see whether there's any negative impact on some of the companies we want to add. We've been thinking of financials. We've been thinking of what happens with respect to a few companies. For instance, APL Apollo. We've been worried about that company for a while. We've been having internal discussions and battles and all that stuff. We will take a decision on these things, but we may add a lot more. We have enough space to add. We might add a bunch more stocks. When we do, we'll come to you. But the main thing over here is that the budget did not throw us any negative surprises for the sectors that we wanted to look at. Some negative surprises for textiles. I was looking at textiles quite closely and saying, okay, there is potentially a growth thing over here. We've seen some really good results with respect to Vardhaman Textiles and a few other companies. There's also, they're all increasing their capex, and there seems to be fairly good and stable demand. So question now is, how do you kind of play this? We might get a longer time to play it. Nothing has changed that says, oh boss, if you don't buy it now, you'll never be able to buy it. We'll have to see the industry response to the cut-off import duties, because they will see all of this and they will all come, oh God, how can you do this? But I think the writing's on the wall, and I want to see some of this kind of play out in the press. But financials look like a clear, decent win over here over the next year. Why? Because of course they lose some money on the bonds, the yields have gone down, but that'll be a 1.5 quarter thing. The pickup in the economy will largely come from the lower tier sector and from the corporate sector. They've pushed corporate capex a lot more by putting in a lot more into their own capex. And I think there is some enthusiasm in building out more in terms of actual infrastructure, whether it is 5G, rural broadband, education, health. They've budgeted a lot more for health this time. They've got mental health which is a good thing. Again, mental health is a big problem that's not acknowledged in India, and I think over time we need to acknowledge that, especially in smaller towns. So they're building out more people, and they're putting NIMHANS around. NIMHANS is one of the best places in India for mental health. So that's it. So answer is, will low volatility ace momentum? I wish I could say that. I don't think I have that sign behind me, and that's what I'll say. I don't know what will ace what in advance, because if you knew, then would you even have the other portfolio? So since everything is like a probability at best, it looks like, oh, next 1 month could be X or could be Y. But I don't think it's useful even making those predictions. Just wait till that happens. What are the kind of stocks in low vol and what are the kind of stocks in momentum? They're different kinds. Momentum will change gear according to whichever stocks move up. Now, today we've seen a bunch of stocks move up with very short-term things. Next 2-3 days, we'll see who the real beneficiaries are, if any, of the changes. If the beneficiaries end up being, say, the financial system or the IT system, IT I think will do okay. There's nothing negative in IT here. I think in the longer term, you'll find that they will ease up, into momentum whenever the market starts to recognize them. Low vol are generally large companies that don't, move around so much. Today, some of them have moved up. Honeywell Automation was up some 3 or 4%. So It's a large company, doesn't isn't generally so volatile. It's not in the low vol portfolio now. I think mostly because it's 42,000 rupees per share. No point putting it into a portfolio. Otherwise, the portfolio size becomes too big. But other than that, a lot of low vol stocks are pretty good. Why does FI still? It's okay. You can have a 20% offering to gilt, because you'll get the yield in the end. I mean, we may not get a lot now because I wanted to get out of it fully. Then I thought, okay, there's no yield anywhere else. So hopefully, if the yield comes back down to 6.5 at the end of the year, you would have at least made 6.5% in the whole year. That means if the when we got out the yield was 6.5, it's 6.8 right now. It could go to 7.1 and then come back down to 6.5. If it came back to 6.5 by next year, your 100 rupees today would become 106.5. It's just that you'll realize the coupon for the most part. Well, not exactly, but it will close in that things. So coupon, I think the portfolio wise, we're not going to change anything. We're not going to jump back into GSEC. We're not going to remove GSEC completely. I think it's fine to have a 20%. And remember, IDFC, if I looked at value research, IDFC Guild Fund, that's the fund that we have, or that we, I mean, that we are the other fund that we had mentioned earlier. This one is probably a better guild fund because it holds funds that are just about, well, okay, is this the one? They've changed now. So they've got about, their duration is about 6.5 years. So this was a little bit lesser last month. It's got increased this month. And Nippon, which is the fund that we own, these are all still at the longer end. So I don't necessarily think this is a bad thing. I just know that this part of the portfolio could underperform. Floaters themselves won't do that well, maybe 4.7 to 5, 5.5. So fixed income this year, regardless of what you look at, I don't think it's going to be that great. Just as a, unless you take risk. And if you take risk, then you might as well go down the equity route. That's the consensus here as well. Disinvestment targets. Okay, so I think I answered that. I think the disinvestment targets was 65,000 crores, right? So it's not a big deal. You should be able to get it with just BPCL. I think they have underestimated the targets. I think they will get more than that. And I think BPCL will happen next year. I'm hoping, at least, because it's too long. Too many things are happening. Cool. Okay. Thanks, guys. I think 1 hour 20 minutes. Sorry, I've taken a lot of your time, but I want to go through the budget with whatever we could. Um, uh, the budget is an intensely complex document. So if you find more things, just tell me on Slack. I'm going to look at this a little more. We'll have some more interesting comments to put in. I hope I hope you've enjoyed this session. It's been fun kind of decoding it, but very boring budget otherwise. Nothing major, nothing big, everything hidden somewhere or the other. And again, it's not even like something that was massive that was hidden. You'll find all of these links contain. So if you're really a geek on this, you want to geek out on it, you can go into ministry wise summaries. Each ministry will have departments. Each department, you can find out how much money they have demanded and how much money they're going to get. So for instance, you got Department of Posts, we spend about 20,000 crores there. Telecom, we'll spend about 84,000 crores. This is the PDS and so on. So you get even detailed comments in there. There's a detailed budget for each of them. So you could, like, I didn't know we had a Ministry of Earth Sciences, but apparently we do. What do they do? Well, okay. There is for observing science. Okay. Look, I don't know we do all this stuff, but apparently we do. So if you're geeking out on the stuff and you find something interesting, please put a note on Slack. Most interesting thing gets, like, I don't know, a video interview on the most interesting thing you found on the budget. But I will leave it there. Thanks so much for listening. Neutrino labs. No shock is a good, yeah, no shock is a good budget. This is like no bad news is good news. And really, policy making happens through the year. When did the corporate tax come down? It was not a budget that brought the corporate tax down. It was September 2019. So I think that is something that we have to be careful, that we don't need to have a budget to put policy documents in. You didn't get a crypto bill, but you got a digital currency by the center. What does that mean? I don't know. Okay, so they have talked about digital currency. Even RBI is probably hearing it for the first time today. I mean, saying, "Oh shit, we have to." They put it in the budget. Ab kya kare? So it's all going to come eventually. What they actually mean by all of this stuff. So let's do things as it were. And leave it here. Okay, so I will kind of close the session now. Thanks so much for watching, and I'm going to end the broadcast. Goodbye, good evening. Have a good evening, all of you.